Net profit. Probably the one definition you don't really need too much detail on. It's your revenue minus your expenses gives you your net profit. And your net profit percentage is your net profit divided by your revenue. In more detail, what you're most likely going to see and what you want to see on your profit and loss to get your profitability is your revenue minus your variable cost of goods sold to give you contribution margin, your contribution margin minus your fixed cost of goods sold to give you your gross profit minus your overheads to give you your EBIT, your earnings before interest and tax, your EBIT minus your interest expense to give you your net profit before tax, then your net profit before tax, taking away your tax to give you net profit after tax. When looking at your percentages and your reference points around benchmarking for net profit, always use your before tax net profit because some businesses will pay tax, other businesses won't pay tax depending on how they're structured. As a reference point, there are exceptions and there are different reference points around what a good profitability is. But I would say as a general rule, if you're running a manufacturing, construction, wholesale or service style of business, you want to be aiming at somewhere between 15 and 20%. If you're at 20% and above in most business models, you've got a very, very strong business. Of course, there's exceptions, such as a software business that will get a greater than 20% net profit. There's also businesses like a hire business that can run at a higher net profit percentage. But as a general rule, you want to be aiming at 20% and above as your net profit before tax benchmark.